5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today.
Interesting, different, unique, innovative companies.
Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley is the CEO of Akerna.
The best trade idea resource out there.
How we doing? Welcome back, ZingerNation, to another episode of Power Hour. Happy Friday. We made it to another Friday. Got a long weekend coming up, so unfortunately for us traders, no trading on Monday. Unless, of course, you're trading crypto. Right, Spencer?
And bonds.
And bonds, yep. So, Spencer, the biggest thing on my radar today, the biggest news I've seen so far, which I'm sure you covered on pre-market prep, apologies for not tuning in this morning. Sometimes Friday mornings for me, I'm not able to tune in. But the jobless claim, or not jobless claims, but positions added, 720,000 was the number that was expected for jobs added in August. Yeah. And the number that came in first at 720,000 was 235,000.
Yeah, it was a big miss, and yet after all that, if you what chart is this up? We got the SPY. Okay, can we zoom in here? Let's bring up a chart.
You want to do a year, a daily?
No, I want to do a 1 minute chart, and I want to go to the chart. Actually, the chart feature here.
Okay, I'm on the. Let's go to the 1 minute.
Let's do this. The white background I found easier to read. So here's a 1 minute chart in the SPY. Okay, so after all this, we're actually not that far off from where we started the day at before the jobs number. Before the jobs number, right when it hit, we were at 453.83. So we're basically down like $1 today, which all things considered is actually not that big a deal for how big a miss that was. It would not shock me for a second if we rally into the close and close green today. Would not shock me for a second. As it stands now, though, we're down in the overall market. We're down in almost every sector, except for technology, and it's where things stand. But you know, holiday weekend coming up, I can easily see a scenario where we just decide to end the day unchanged or even in the green.
Yeah, I mean 100%, Spencer. But on that note, I would say I wouldn't be surprised at all too if there's a tiny little sell off into the close, and we end up down a percent or so on SPY. I don't think either scenario would shock me in the slightest with the way the markets have been. And yeah, Raheem Luke is at the dentist again. He did say he may be able to join from the dentist, but only if we get this episode up to enough likes, which I think he set the bounty at like 200 likes, which I was like, Luke, you're a nice looking guy, don't sell yourself short. So I said 250, but Luke said 200. But yeah, I mean that was, and Christian Gallagher saying it's just a rounding error. I think he's talking about the jobs added. Let us know what you mean by that, Christian, because I haven't seen anything, regarding a rounding error.
I think he's just referring to the overall market, actually, in terms of what we're down today. Like, we're basically down a rounding error today. It's nothing. We're down nothing. We're down 0.08% in the S&P 500 futures. Like, we're down nothing today. So
yeah. And I'm seeing someone else in the chat, Tokes and Trades. I like that name. Saying NVIDIA to the moon. This is a stock that we talk a lot about. I talk a lot about NVIDIA. It's one of my favorite all-time stocks ever. It's in my long-term portfolio. NVIDIA is up about $4 last time I checked. Let's do another check-in on it. NVIDIA's up, $4.74, up about 2%. I mean, this stock just continues to keep ripping after that split.
Yep. I'm also watching the biggest mover of the day is KPLT. Catapult Holdings. This is another like fintechy buy now, pay later type of thing, right? So I did buy myself some Affirm yesterday, but Catapult does kind of something similar, I believe. and this thing has gone as a 4 big up days in the last 5. It is my top gainer this morning on my Benzinga Pro scanner tool. You can see it up there, up 20, almost 24%. So I'm watching KPLT today as just to see, just sort of if we can go back to the chart here for a second, just to see if we can fill the gap. So like what's the 50% of the move, right? So the low of this candle was 932, and we are at 684, and the gap was started at, so we were 932 to 588, and we're at 684. So we're not quite 50% of the move of the way there yet. But if we can get there, pretty sure that coincides with the 50-day moving average right there on the screen. So if we can get to that 50-day, then yeah, maybe I see $9 in our future for Catapult. So watching that today.
And I don't know anything about this company, Spencer. Do they produce and manufacture catapults?
We should be so lucky, AB. If you don't know anything about a company, you can just go into the overview tab in Benzinga Pro, scroll down, it says it right there. Omnichannel lease purchase platform, aka buy now, pay later. E-commerce company focused on fintech. It's the same thing that Affirm does. It's the same thing that Affirm does. We do.
I'm out on it.
You're out?
I'd rather have the industry leader, which is of course Affirm. And there's a lot of other private companies, Spencer, that have raised a lot of money that do this similar thing. My cousin actually works for a startup in Chicago that is kind of a fintech. Slightly like Affirm. They kind of match banks with the prospective lenders. So I don't know. I think there's a lot of players in the space. No matter the space, I'd always rather have the leader. But I mean, with that being said, Uber needs a Lyft and Coke needs a Pepsi. So
yeah, those are both good points. What's the name of the company your cousin works for, Richard? Do you
I believe it's Affluent. It's a private company, like I said.
Okay, cool. I'm always interested in new fintech apps and new fintech startups. I want to talk about that, and I want to talk about, there's one more thing that I'm just forgetting what I was gonna say. Oh, I forgot. I'm in weekend mode. I was gonna say something and I forgot what it was. So let's just pretend that didn't happen.
Okay. Forgotten. Shout out, who was it in the chat? Someone put a nice little pun in the chat. What did they say? I gotta find it.
All right. Well, while you find that,
okay, I got it. Proton. Luke is gonna call in from the dentist. Wow, way to bridge the gap. Hope he can drill down on some good stocks.
Proton with the 3 puns in one, a triple header. Very nice job, Proton. Let's give you a round of applause for that, because that was an impressive. Where's my applause? There it is. Very nice job, Proton.
Wait, I'm only seeing 2. You said 3. I see the bridge the gap and drill down.
Well, bridge is one, gap is another.
Is
right?
bridge a dental?
Well, like the bridge of your mouth, and then
okay.
And
then gap in the teeth. Got it.
And then drill down. There are the 3 that I see. So anyway, okay.
The company my cousin works for is actually Amount, not Affluent or Affluent. The first one I said. But yeah.
John says John sold Affirm again. Are you buying? So John's just playing the range from the past couple of days. Is that right, John? You're just selling every rip and buying every dip on this range, John LeGressley. Good for you, man. If it's working for you, keep doing it. I set a stop loss at $90 even. I think so. I will be set it and forget it for Affirm through earnings next week. Let's see. What else are you watching, AB? What else are you guys watching?
I'll pull up my portfolio in a second. We'll look at the live trades that I have open right now. I see Kira in the chat is asking, are there any good Joe Rogan horse medicine plays? I believe
Spotify.
that's one. I believe, and I'm not positive, but I believe Merck actually produces the what's it called?
I don't know how to pronounce it.
I don't know how to pronounce it either, but I believe they produce the. So here's the thing: there's the version of this ivermectin or whatever that is for horses. And there's also a version that is medically produced for people. And I believe Merck produces the one that is medically produced for people. Let me see if I can find the pronunciation.
Did he say he took this? Is that what he said?
Yeah,
I remember I saw the video. He said he threw the kitchen sink at it, but then he said all these things and I didn't know any of them more, so I just stopped watching because I don't care.
Ivermectin.
Thank you, Vernon Lamb.
Ivermectin. Yeah. So I assume when he said he was taking ivermectin, he was taking the one that's for people and not the one for horses. But I don't know. You never know.
All right. Who are we talking to today, AB?
We're talking to Tim Quast, who runs Market Structure Edge. So if you're ever curious about kind of market makers, how the market actually operates, Market Structure Edge is a great site to give you some insight there. And Tim is just fascinating with his knowledge of the markets, kind of sees it differently than most traders. So hopefully he'll be on any minute now and we can go through some tickers on his site.
So let's look at, before that, let's look at BBIG here. So, okay. This BBIG chart is a bit of a, here we go. Bit of a sticky wicket here. So what do you do? What do you do? I don't own this stock. AB, I don't think owns this stock either. What do you do in BBIG? If you are, I'm assuming whoever's asking this is long. I mean, and I'm assuming you're long from somewhere above $7. But I don't actually know. So if you have a question about a stock and you drop a ticker in, tell us where you're in from, because that can inform that changes what we say about it, right? Because my take now, honestly, is what's that low? 551. That's so far away. It's $2 away though. I would say if you're long this thing, and the next levels, I would start to really panic if we broke. We already did break below the close from, what day of the week was that? Tuesday, Monday and Tuesday. Yeah, we already did break below the close of Monday and Tuesday. But I want to see us hold the close. The close on Monday was 706. The close on Tuesday was 815. If we close below either of those today, I would not. I wouldn't say panic is a strong word, but that would be a very bad sign for me. Right? We talk about opens and closes being more important than highs and lows a lot. So that's all I can say about it. Right? Hold the close from Monday and or Tuesday. And if not, then I'd be concerned. But again, I don't know where you're in it from. So Tim says 836. Okay. Well,
yeah, to me, Spencer, some of these stocks that are, something like BBIG that's trading higher than it maybe should be, but it still has potential for like a big short squeeze. I think there are a lot of different ways to play it. Me personally, I would play it as more of a, kind of degenerate play. So I would take like maybe a couple $100 that I wouldn't mind losing and just throw in some like ridiculous, $12 calls out there or something and just hoping for the squeeze, knowing it's not likely, but that I'd be okay losing that, money that I put aside for it, knowing, hey, this $200 could turn into $3,000 or something if this really runs. And that's how I've kind of been looking at a few of these different, I'm not going to say meme stocks, but a few of these different like short squeeze candidates that have a lot of attention from people on Reddit, Twitter, and other social places.
How high is the short interest on BBIG? Let's look it up real fast. Let's go to Benzinga Pro. Go to the we don't have the number. Shoot, but
I know for support.com it was about 27%. Right. Shout out Daniel in the chat saying that's how he's playing it. And again, I mean, that is not investing, throwing money out on a call option like that. I mean, that's more of just like a degenerate bet, right? But I think that it's an interesting way to play it because you have a very fixed risk. I know my risk if I spend $200 on calls. I know my risk is going to be $200, and the potential upside is huge. So that's what's interesting to me on some plays like that. I was actually looking at some wish calls for that. But I'll pull up my portfolio right here, Spencer.
Yeah, do that.
I've got a few different open options contracts that have been doing well this week, but right now, not having a great day. I don't mind. I'll just share my whole portfolio. It's not that much money in here. As you can see, I'm down about $50 today. Here are my open options. These ozone ones are completely worthless. I bought those when the stock was like going up a lot and then it just crashed. So those have gone down worthless. These array calls, I originally got, let's see. I originally got these July 1st. And if we look at the chart of array, we'll see, here's where I got in on July 1st. And the stock actually went down a bunch, so my calls got wrecked, and I just held on to them, diamond hands to them, and now the stock has come roaring back. So those have been playing nicely. I have the $20 strike, so it's at $19.32 right now. When I got in, the stock was at about $15, so it's been up almost 25%. But of course, just that time where it went down kind of crushed me because the theta decay was working against me on the time. But I'm holding on to these strong. I think we could see another leg up on array. And then the other big one I have right now is, I got into these Sofi calls yesterday, Spencer. So they haven't really done anything yet. But I think if we see
that,
good
luck with that.
I think if we see Sofi leg up to $16 or so, I'm going to get out of these contracts for a nice little gain. Right now, I'm down 10% on them, $30. But yeah, pretty quiet day in my portfolio, down about $50, like I said. But hoping for some movement in the stocks that I have the options in right now.
All right, well, let's get Tim Quast on. I see him backstage. Can we get Tim on?
Yeah, let's do it. Let me play my little intro video, and we'll get Tim on.
All right. Hey,
Mr. Quast, how we doing on this Friday?
Good to see you. Well, thank you, Aaron. I'm not cool enough for that kind of bumper.
I think
intro.
you are. I think you more than meet
Me.
the criteria needed for that intro.
Well, it's good to see you both. Happy Friday, Spencer. It's a treat to be able to see you.
Happy Friday
twice in a week.
Thank you, Tim. Tim, I want to ask you. We always talk about like events and how events play out from the market structure side of things. We have an event Monday in that it's an off day. Right. So how do off days when the market is closed, how does that kind of affect the market? Maybe the day before, like today, or maybe the days after.
Right. Great question. It may depend, but a good rule of thumb is that if there's a long weekend, money that has short horizons is going to take protective measures. Not too, I don't have to be too smart to figure that one out. It's a logical thing that in markets where things change rapidly, that you would hedge yourself. So what does that mean? Well, if you're a trader and you are going to hold something over a 3-day weekend, you want to hold things that are unlikely to be impacted severely by the unexpected. You just never know. And so hedge funds are going to do that. Hedge funds are definitely going to either put in protective positions or use derivatives or short the market, something that will help them have a protective cushion if things change. I can tell you that the folks at Millennium, so one of the largest hedge funds, they have roughly 50 different internal funds that compete with each other, and they have a 5% cutoff. If your positions are down 5%, the mothership will step in and wipe you out, just exit you. So if there's a long weekend, you can imagine that there's a hedge for a 5% move in the market.
All right. That's a shorter leash than I've got, which I guess is something about my risk tolerance. So protective puts, I keep hearing about that, Tim, and I'm not. I guess you're free to do it. Everyone's free to do what they want, but I can't imagine that they're going to be worth anything here when we get to expiration. Maybe I'm wrong. But Yeah, I don't know.
Well, you raised a great point, and I caught just a piece of your discussion there with Aaron about. I think Aaron, you had calls, and you mentioned time decay. Those things are very for option. I think not just for options traders. They're important concepts to understand about how stocks may move when companies report results. A lot of that has to do with time decay and an opportunity for somebody who has muscle to buy a lot of options that are out of the money and then move the market. There are aspects of market structure that have to be understood in order to do that. But it can happen. And of course, keep in mind that 90% of options expire without ever having been used. And principally, the professionals who are trading them are hoping to simply sell them to somebody else. That's the whole point, particularly if you have the enormous firepower that a fast-moving hedge fund would have. You can move prices. Look, I can occasionally move prices. I'm a tiny little guy, but if I put in market orders in certain stocks, like Summit Materials, which I currently own, my marketable trades for more than $3,000 will move that price materially, because a marketable trade cannot be front run by a high frequency trader. So it's going to have to move to wherever the liquidity is. It's the rare time I might actually execute a trade as a retail trader on the NYSE.
You used a term there, marketable trade. Explain what that means. I think people maybe heard that word, but they don't know that it means something special.
Thank you. I do this to public companies, or I do this to speakers who talk about market structure all the time. Yeah. Don't use jargon. You have to explain the terms. Yeah. So it's a very important traders to understand. There are only two kinds of trades. That's it. They're either marketable or non-marketable. What does that mean? A marketable trade means that there can be marketable limit orders if the limit is within the spread between the bid to buy and offer to sell. Again, one of the things I consider market structure 101 for traders is to understand that all stocks in the national market system, I'm not talking about over the counter, there are different rules for the 350 companies or so that trade on the NYSE American market. That is not part of the national market system. But those that are on the NYSE and the NASDAQ national market system, the NASDAQ NMS, those stocks all have to trade between the best bid to buy and offer to sell. And they can never be the same, right? That's believe it or not. So you go in a grocery store, you pay the price that's on the product, right? So the weird thing in the stock market is that will never be true. You're always going to pay something different than the price on the product because of the bid to buy and offer to sell. So anything between these two is a marketable trade, whether it's a limit or whether I put in a market order. And so then things that lie outside of the best bid to buy or offer to sell are non-marketable trades because the likelihood they execute is significantly lower. So if you put in a limit like I did last week to buy or to sell Apple at 155, and algo managed limit order at 155, where did the price go? 154.98. Never got there, right? Because
I hate that.
Well, and there's a reason, and it's very important to understand this, traders. And Gary Gensler mentioned this week. You know, I say this, and I get attacked by Doug Sifu from Virtu on Twitter. But it's true. No offense, Doug. If you're listening to this, I really like him. He's a very good guy and a very bright guy.
He's not watching this. So. Okay.
Yeah. For those who don't, Doug Sifu is the CEO of Virtu. If your trade is a limit order and it is being sold by your broker dealer to somebody else to execute, that party knows before the trade occurs where it's sitting. They know exactly where the prices are. So if a market maker who is purchasing those trades says, well, I've got all of these orders at 155 and I got nothing to offset it, I'm never going to take the price to 155. I'm going to keep it just below that because there's too much risk for me. I paid a price for those trades, and it's my intention to profit on having bought them from Robinhood or wherever. I'm an Interactive Brokers customer. Mm-hmm. And I pay a commission of about $1 and $1.05, something like that because I want to see where my trade goes. I want my trade to have a chance to meet somebody other than a high frequency trader if it's possible. Not always possible. So that's important to understand. You should know as a trader, you will be heavily encouraged to use limit orders. And I'm not knocking it. You see, when you use market orders, there is more risk. You are going to accept that the market can move on you. So there are pros and cons, but you should be an informed trader. So the broker-dealer is going to encourage you to use limit orders. Why? Because they sell them. All right? That's why. All right? They want you to have a limit order so they can make money on it. If they're giving you a free trade, they want to sell your order. If you put in a marketable trade, they can't sell it to somebody. All right. So they are going to encourage you to do that. And if you use market orders, you're going to get nasty little scolding emails from your broker saying, we see that you are using marketable trades, market orders. And we want to tell you that this is very risky social behavior. So you should know that.
I wish I could remember I threw out a stop loss order today, right? Market order, right?
Yep.
And I wish I could remember the message that I got, the warning I got from I use Fidelity, but it was in the same vein. It was you've entered a stop loss order. I don't know all the reasons they could go wrong, basically. Right?
Yep.
And I was like, okay, confirm.
That's exactly. I have to do it every single time.
Right.
I also don't use market data. So I'm warned repeatedly by my broker, you are trying to trade without logging into market data. Well, I don't do that. I'm a sophisticated market user. I'm not encouraging you to do that. You have to know what you're doing. But there are reasons for all of these things. There are. And it's if we're going to be informed, educated traders who have a chance to compete with the professionals who understand all the things that we've just talked about here, you should know them too.
So, Tim, last one before I got to hop. How do you feel about stop orders? Right? Do you use them? Do you use mentals, physical?
I very rarely use them because I use market structure edge.
Right.
So I know what the supply demand balance is. So the only time that I would use a stop is if I believe I'm on the wrong side of the supply demand balance. If I'm not, I'm going to trust supply and demand over any other thing. But look, I'm not encouraging others to do what I do. I've been doing this a long time.
All right, I have to hop on that note. It's 12:30, and I'm 2 minutes late for what I was planning on doing right now. But if you have tickers for Tim, drop them in the chat. A, B, and him. We'll bring it up on the market structure.
We could talk about Palantir, one of the favorites, and where opportunity may be returning to Palantir when it's long been gone.
All right, Tim, I will not see you next week, but everyone else will. I'll see you in 2 weeks. Have a good one, sir. See you,
you too, Spencer. Good to see you. All right, enjoy the long weekend.
Beautiful. All right, Tim. Yeah, if you want to get market structure edge pulled up, we can go ahead. I know we, you sent me some stocks we should talk about too. I think Zoom and DocuSign were on there. We've seen a lot of interest in those stocks as well. And then we have some stocks flying in the chat. Okay. So we can check those out on market structure as well.
Okay, so let's go over here, and I'm going to back out of this and save this. So, and I might mention, if you tune into pre-market prep, of course the market is closed Monday, so I'm going to be on Tuesday. So it'll be a weird market structure Tuesday, but if you are a regular doing that, that's where we'll be this week. Also, Aaron, we should mention this. So if you want to understand how to use supply and demand, which is the core thing we think about. See this on my screen here, demand and supply. This is the core of market structure edge, and I'll explain it briefly, but we're doing a Benzinga boot camp on 9/11. I mean, it's a very important day. What better way to market by recognizing the great power of the American free market system, which is reflected in the stock market. And we'll talk about how to beat, buy, and hold by understanding supply and demand and applying it to your trading strategies. You don't have to take risk. You don't have to be uninformed. You don't have to guess. You can chuck the charts. Just understand supply and demand. And so that's my plug for both of us. Benzinga
go.
and Market Structure Edge on September 11th. Don't miss the boot camp. It's a great educational experience. If you're learning and you want to become good at navigating a complex market environment, ecosystem, it's a great place to be.
Yeah, 100%. And Spencer and I were kind of actually joking about this yesterday. I was like busy on a call from 3:30 to 4 Eastern time. So the market closed. And I was looking at the charts and I was like, wait, why did I think it was like Dow more so than maybe the other indices, but like had a huge spike up the last 30 minutes of trading. And I was like, what happened here? And Spencer was like, I don't know. I was like, more buyers than sellers. He was like, yep.
Would that it were. It's really, it's one of that we joke about this all the time because my background is in what's called investor relations. So that's the term that is applied to the office or department at public companies. So I've got this set of companies on the screen here. So there's a head of IR for investor relations for Zoom. And that person is the liaison to Wall Street. So that person guides interaction with the sell side, the analyst firms like Goldman Sachs and Morgan Stanley and down to Raymond James and Evercore and folks like that who write research on stocks. And so somebody is responsible for that relationship at a public company, and that's investor relations. And then with the investors, which is called the buy side. There's the buy side that buys stocks and the sell side that sells them. And the sell side supports it with research and banking and market making, and the buy side now increasingly does its own work. But that's my background. So I've spent 26 years in that profession, providing data principally to it. I've been an investor relations officer. And I provided data, but it's we joke all the time that there are, why is the stock down today? Well, more sellers than buyers. Why is it way up? Why are we outperforming our peers today? More buyers than sellers. And I wish it were true. The truth of the matter is almost half of all market volume is borrowed. That's the supply chain. So in fact, looking at this portfolio called Benzinga PowerHour today, it is comprised of, if we scroll down here, we'll see that there are 6 companies in this portfolio. And if you take the composite of the portfolio, here's the demand chart and here's the supply chart. And generally when they're moving opposite, that's good news for prices. If demand is rising and supply is falling, prices should rise. And you're seeing this in the economy, right? Where there are supply chain interruptions and what's happening to prices, they rise. That's how economies work, and the stock market is no different. It's just harder to understand what demand is and what supply is because of the way that the market works.
Definitely. All right, Tim. Yeah, why don't we go through just off this list: Zoom, Zoom, Palantir, DocuSign. We'll start with those 3.
Okay. So, and I told the crew on pre-market prep show Monday. To avoid Zoom. Don't buy Zoom because they'll probably have very good results. But if we look at the supply-demand equation, this is looking just at 30 trading days, and I can expand that out. In fact, let's do it. I like to look at 90 trading days. So the stocks tend to do better. There are always exceptions to the rule when demand, represented by the green part of the chart, is above 5. We just have a 10-point scale. It's an algorithm that meters trade executions by behavior. What is active stock picking doing? What is passive investment? That's quants, indexes, ETFs. What are they doing? High-speed traders who consume retail order flow. What are they doing? People using derivatives. What are they doing? We can measure all of that very discreetly. And the confluence of those behaviors creates supply and demand. So we can see that. So here, Zoom did great until demand began to decline and supply began to rise. Here's where there's a huge glut of supply in the market, and Zoom has not really recovered from that since. So here's what was happening right ahead of results. The demand side was rising, but not very well. It's like trying to accelerate up a hill in a Yugo. You're probably too young to even know what a Yugo is. Go look up go to YouTube and look up Midas ad Yugo. It's really funny.
I'll do that.
It's very, very. Let's jump the bridge. You'll see what I'm talking about. So weak a weekly rising demand, but supply that is rising faster than that is not generally good for price. I'd look at that and say, well, no, I'm not going to buy that. And sure enough, it went down. It's not, I don't care what they're reporting. All I care about is the supply demand equation. It will be a much greater determinant of outcome than how stocks perform relative to expectations. This whole idea of earnings versus expectations is an arbitrage strategy. It's not motivating investment behavior. Investors who are well informed will have a very good idea what Zoom is going to report because they model outcomes. They're tracking the fundamentals of that business. They're probably looking at the supply chain and distribution channels for Zoom to say, well, how do those things look? They're going to know a fair amount. What they don't tend to know is exactly this, supply and demand. So that's why Zoom was down. Weak demand, rising supply, stock's going to go down. So now let's look at DocuSign. So DocuSign, much better equation. And it's part of the reason why the stock is way up today. Now, it may not last. We'll see. So here's demand. Demand actually peaked yesterday. And you can see that's the reading on this. I think I have to, where is it right here? I just missed it. So it's 9. So, if it's 9 out of 10 and peaked, that's very strong. And what's the trend line on supply? Falling. I tweeted that it's probable that DocuSign has gains. I didn't think they'd be as good as they are. Matter of fact, they're better than I expected. But again, the supply demand equation will tell you what to expect. Then PagerDuty, the PagerDuty is awesome. This was fairly predictable to say you have demand slamming into the ceiling, way more demand than supply. Supply is well below that trend line. So if demand is strong and supply is less than what it should be, price can really move on those conditions. And sure enough, it did. So if you're trading things, this is a good reason to use Edge. You can try it for free. Don't need a credit card. Try it sometime before earnings. You've got a set of companies. You can do it for 2 weeks that you want to track into earnings. Give it a try and look at them before they report. If you see this kind of condition, there's a high probability that it produces good returns. If demand is weak and supply is high, realize that the likelihood, no matter how good they report, is that the price will go down.
Guys, sorry about that.
Okay, well, there was something else I was supposed to look at.
It was Zoom, DocuSign, and Palantir.
Palantir. Okay, so let's look at Palantir. One of the great Reddit mob favorites. One of the great favorites of day traders. And let's back this up too, and let's go all the way back 6 months and look at what's been happening. So for quite a long time, Palantir struggled, and it's clear in the data why. This looks like the coast off of Thailand near Phuket. there are peaks, but then there are big deep seas, and so Palantir was spending more time below 5 than above it. You could capture maybe little short-term gains in there, but if the stock is struggling to stay above 5, it's very unlikely that you're going to have gains, no matter how good the news is. So. Looking at the whole thing here, supply and demand on top, supply underneath, here was a pretty good turning point. So as this excess supply began to come down and demand increased, wham, we took off running. And the whole time that it stayed above 5, it was great. As soon as it peaked and supply began to increase here, and you could see that, right? At 10, and if short volume returns to trend, I'm probably going to leave. Even it could still go up, but that's a pretty good gain. Then I wait for it again to rise above 5, and look at this. Supply gets below the trend line. Stock returns to 5. Now we have chances for gains again. And look, they continue. At this moment, with short volume a little below trend and demand above 5, it's likely that Palantir continues to deliver gains. That's how you want to use it. It's a simple thing. You don't have to look at a stock chart and try to figure out what's going on. Just look at supply and demand. It's the simplest thing in the world. You just need a good way to see it, and we've created a way to see that. Not perfect. There's no perfect system because things can change outcomes. There are 2 things that we talk about all the time. Month ends, because there are huge futures and options contracts used by indexes to true up tracking. that expire on the last trading day of the month. So either side of that, the banks behind them are going to hedge, and the indexes and ETFs are going to offload their risk. Well, that will distort outcomes, as will happen about the third Friday, Wednesday, Thursday, Friday, thereabouts. I look at about 5 days each month when options expire and new ones trade. Once again, there are this turbulence that can arise because the things that you can't see are occurring. Derivatives, most derivatives transactions are off market. So then you see the consequence in the equity market. Well, we advise just avoid those. Take your money off the table, go through the 5 days, put it back in, depending on what broad sentiment is telling you. It's a great way to avoid getting trampled by the herd. And it's paid off time and time again. You look at April, May, June, July, August, all of them had a dip during options expirations that if you avoid, you're that much ahead, right? If you avoided a 2, 3, 5% decline, then that adds to your returns and you can continue on. That's how you beat the market.
Yeah, I mean, I find this stuff fascinating. I put the link in the chat for the website in case anyone wants to go check it out further. Tim, I believe there is some sort of a Benzinga thing on there. Is there a place they can say they're from Benzinga? After you do a
2-week trial and it expires, ask us for the Benzinga special and we'll hook you up.
Yeah, there you go. That's that insider deal.
Exactly.
And Palantir, I mean, this is one that's just so fascinating to me because we hear it, we see it every day in the chat. People love trading it.
Yep.
I got to be honest with you, Tim. I still don't know what the company does.
So one of the great data security firms, principally serving the government. They have big government data contracts.
Right. I know that a lot of their revenue is dependent on getting these big government contracts. And they
still lose money. They're not making money.
And I know it's just so funny because it's like people are like, yeah, it's the public version of like SpyNet or something from
right.
but yeah, it's one that we look at all the time. I wonder, I'm seeing a lot of people clamoring in the chat for BBIG. I don't know if that's on your site yet.
Let's check. I don't know necessarily if it is. Oh, it is. Okay, so it is. Let's go check that. Anybody else that I should add?
I mean, I'm always interested in Tesla. I mean, I would like to do Tesla after that. So,
okay. Let's do it. Okay, so let's go to BBIG. By the way, and you can isolate by ticker. I'm just going to come down here and look at it. There it is on the bottom. By the way, looking across here, look at this. These are the core data points that we think about. So if it's 10 out of 10, 10-point scale, we know that demand is slamming into the ceiling. So then we really want to look at supply because we know demand's good. And so that it'll say topped. If it spends more than a day after having risen, it will tell you it's topped. Doesn't mean it's going to fall. That, we can always backtest data. We have a fantastic backtesting engine to tell you what has happened under these conditions previously. Doesn't necessarily mean it will happen again, but it gives you a very good idea. But look at this. Short volume. The supply side is over half of the trading volume. So 57% of trading volume in Vinco Ventures, which is BBIG. So it's a short form video SPAC. I think it's, how do you say that? Is it, your folks in chat may know. It's Lumitov. Is that how you say it? I'm not sure. So this will tell you, here's the last price that was less yesterday. Not real-time data. We don't trade price. We trade sentiment. Price is capricious. Price is out to fool you. Some machine is out to trick you. So don't pay too much attention to price. Trades about $2,000 at a time. Market cap 523 million. Key leading behavior is Citadel, Virtu, Two Sigma, Quant Lab, Jane Street, Tower Research, Infinium, GTS. These are firms that trade their own books and they're very good at it. They know market structure just like we do. So they know there's a big demand and they're front running it. And at the moment, I actually look at this and say it's probably not terrible. Let's back it up as far as we can. Well, okay, so here's a good look. Here's the demand side. And if you bought the rise over 5, that's really your entry point. The reason that it didn't rise right away is the supply side. So demand rises above 5, price declines because the supply side also rose above that dotted line for the trend. And it's been there. But demand continued to rise, so it's pushed it to a peak. The reason it's retreating is because of the supply side. Now, it may bounce back up. If this tails down a little bit, you could hang around. If demand begins to weaken, get out. That's telling you. You know, and I trade meme stocks periodically, but never without knowing the supply and demand, because otherwise you're just gambling. You're just taking a chance with no idea what's going to happen to you. I traded a GameStop last week, made a nice profit in it. For me, a gain of 4% in a day or two is great. That's what I'm after. You keep stacking that and you get a very nice return. And so you want to make sure, though, that you don't get caught out. Price could be up and you have no idea that short volume has surged 15% day over day and demand has stalled, and you're going to get slaughtered. That's how it happens. Don't take gains, not chances. That's what I always like to say.
So I know there are a couple different factors, but what typically causes the supply to rise in an individual stock?
Well, that is a fantastic question, Aaron, because it goes to something that I think all traders should understand. So supply is borrowed stock in many cases. That's what we're measuring down here. We're measuring the percentage of daily trading coming from borrowed shares. And FINRA puts this data out. The NASDAQ and the NYSE sell this data. The SIBO provides it through FINRA. And then we use modeling techniques in addition to that. So there's raw data and then modeling techniques, and we've used it since it began to be published in 2009. So we know this data very, very well. So how can there be that much borrowed stock in the market? Well, it's part of the SEC's plan to have what's called a continuous auction market. Why is it that there is 100 shares of everything available at the bid and the offer? If you can look at level 2 quotes, you're going to see there are quotes. Well, what if there are no buyers or sellers? How could there be a quote? Well, if you're a registered market maker, you are required to quote at the bid and the offer. Now, you could be outside the best bid and offer, but you're going to do that. The SEC exempts market makers. So that's everybody from Morgan Stanley to Citadel and Virtu and QuantLab and Two Sigma and GTS and Infinium and Jane Street and Tower Research and so on from Reg SHO, which are the regulations that govern shorting. Rule 203B that says you have to locate stock before you can borrow it. The market makers came to the SEC when they implemented Regulation National Market System and said, awesome that you want to have this 100 shares of everything available all the time, but it's impossible. We can't do it. We wrote a blog about this, by the way, this week, and you could see it at Market Structure Edge. It's called Gensler's Gambit, and it's about this continuous auction.
Interesting.
Because he's questioning payment for order flow, whole other discussion. But this is an important concept, folks, so stay with me. So the SEC said, okay, we get that. If there are no buyers and sellers, then how can there be a quote at 100 shares? And what if you want to buy 100 shares, but no one's willing to sell 100 shares? Well, the laws permit a market maker to just sell them to you, even if none exist. That's the exemption from that rule. And that is what you see down here. So when there are 10,000 orders to buy BBIG coming out of Robinhood and no sellers, Citadel and the rest of the group are going to create enough shares to fill all those orders. That's how the price goes up. Then they have a responsibility later, within 36 days, to offset that liability with an asset. They can be covering all of those shares, or it could be replacing it. I could just go long Apple to offset it in equal value. So those distortions can continue. It's another reason why you have to understand this. It's not a short squeeze. Short squeezes happen, and we'll see them in the data. There are very distinct dips in the short volume side of the equation. But most of the time, contrary to popular belief and the belief of the meme stock traders, they're not squeezing folks in most cases. They squeezed Melvin. There are some less sophisticated hedge funds that make these mistakes. Most don't. They'll swap away their exposure. But that's the truth. It doesn't require high short interest to have a meme stock condition. All it requires is a supply-demand imbalance that triggers this exemption from the short locate rules, and market makers come along and create shares. And it works best, by the way, in stocks that have lower shares per trade. Much harder to do in Tesla because it trades $14,000 at a time. With Vinco Ventures only trading $2,000 at a time, heck, if I bought $200,000 of it, I'm moving the stock, right? Doesn't take that much. It's going to move. Much harder to do with Tesla, and let's finish there, Aaron. So going to Tesla.
You read my mind.
And I know we're right up against it here, and you probably have wrap-up comments. Look at Tesla. The reason why it's done well here recently is, once again, rising demand against a flat or slightly deficient supply side. The supply chain is a little bit behind, and the demand side's been very good. Now, it's just about run its course. It's at 10. So, if you chase this, you're not going to get much more. And I certainly wouldn't chase it over the weekend. Don't buy it right before a 3-day weekend. Wait till we get past Labor Day, because you don't know what's going to happen. I mean, if we come back Tuesday and this short line has jumped way above trend, it's over. The run's going to be over. You want to see here how great this was? Steep demand slope and weak supply, price is going to move. And you can make a very nice gain. And then as soon as that begins to falter and short volume jumps way above trend, get out. And then come back when the opportunity presents itself. You don't have to buying and holding is risky. Time is risk, because you don't know what lies ahead. So if you take your money off the table, put it back when the odds are in your favor, demand's good, supply's weak, and those things equalize, take your money off the table, pick something else. That's what you do. You repeat that over and over, and you can succeed in a market that is built around short-term behavior. That's what I've got, Aaron.
Yeah, I mean, I love this stuff, because I think, myself included, with a lot of other retail traders, don't even consider a lot of this information when making our trades. Right. When not only should we be considering it, but we should be, implementing this in our process when we're making the trades. So I love having you on, be able to get this insight, especially from someone like yourself who understands it so thoroughly. And yeah, I mean, it's just fascinating that you've been able to make this data like readily available in a very way that's easy to understand visually on the website.
Thank you. It is. There's nothing else like it in the market. So the edge mob has an edge. Do
you track ever, like, for instance, like the edge mob's trades or maybe your own trades you're making based off this data?
We don't, because you can't trade with this platform. You can only make decisions. It's a decision support platform. Could we look at the data about what people profile? The profiler is the back testing engine. Absolutely, and we could do that. We can make that available. We do all kinds of things, though. We continue to add math in dynamic portfolios that will do this for you. So we say, liquid up stocks that are highly liquid, that have rising demand in the best sectors and stable or falling supply. Look, we're going to aggregate that for you. We do that dynamically. And I was working with our young mathematician, Nate, who runs statistical analysis, to say, well, what's the probability that if you buy rising sentiment in, say, NVIDIA, that you make 3% in 3 days? I want to know that probability. By the way, that probability is 52%. So
wow,
that's a little bit better than a coin flip, but we want better math than that even. But we're doing that stuff all the time. And as we come across things that are beneficial to the edge mob, we're going to add that to the platform.
Got it. Well, yeah, thank you again, Tim, for coming on. Next week, we will have you on PowerHour again, as well as Get Technical. So ZingerNation out there, do not miss that. We'll be able to get more insights on some different tickers, whatever's moving next week.
We'll have new stuff, new material.
There you go. Hex in the chat is saying this opened my eyes back in June when I first heard Tim. So yeah, I mean, myself included, Hex, it's very eye-opening. And yeah, Tim, enjoy your long weekend.
You guys too. Thank you very much. See you, Aaron.
Bye, Tim. All right, y'all. That was Tim Quast of Market Structure Edge. The link is in the chat and description. I'll throw that up one more time. You get a free 2-week trial, as well as a Benzinga discount if you decide to go ahead and then subscribe to the service after the trial. Let me throw that link in there one more time. I'll throw my portfolio back up. We'll do a check-in on that. Sheesh, down about $70 now. I don't know. I might just bomb out of all these contracts. I don't really like holding options contracts over a long weekend, but I also don't like taking losses. So let's see what Sofi's doing. Okay, Sofi. Someone in the chat was asking if Sam had news, if Boston Beers. Is there a reason why? I don't know if the stock is moving or not. Let's check in on that, see if there's any news here. And we see this little leg up here. I don't know if that's why someone was asking if there was news, but this stock's been a dog the past couple months. I actually went in and bought some based on, I liked something there with the financials, the fundamentals, and it seemed like a bunch of analysts were rating it to come higher. So I don't mind this, but since I've gotten into it, it hasn't been a good trade. So let me know y'all's thoughts on Boston Beer. And let's see, we got about 2 minutes left. So if there's any other tickers, someone wants to check in on, let me know. We can get to one more ticker, but we do have Get Technical starting up here in just a moment. I'll be hopping over with Neil. We got a nice show today. We actually have a guest from ZingerNation joining us, Captain Cappy. So excited for that. We'll get Miles on. We're going to tease a new product we're doing. Oh, Sam is trending on Twitter. I mean, if people on social pick it up. All right, let's do Luis wants AVPT. This will be the last stock we look at on PowerHour today. Nice day so far for Av Point, up about. So this is what I always do. I always, start with the 1-day chart, see how it's reacting today, and then I want to go further out. I want to see like the year chart, how it looks. Okay, so on the year chart, we can see the stock was previously trading at a high of about $16.95. It's come down a lot since then, but for the past, since August 19th, we've seen some strength back in the stock. I don't even know what this company does. Let's see. Operates digital, provides data. Okay. Yeah, I mean, look, I think this level right here, and I'm just on Robinhood right now, so it's not a very sophisticated chart, so I need to look at it on TradingView or on Benzinga Pro. It looks like we're at a very important part in the chart right here. Like, will there pass through this previous resistance and support? And it looks like if we do, we can run all the way up to 1160. But I also wouldn't be surprised if we hit this and start losing some momentum. People start taking profits and selling off. All right. That is enough from me today. We will go over to Get Technical. As I said, it's a very big show today. Do not miss out. Pumpkin spice beer. The problem is, Sam, you have so many desperate bag holders. Yeah, I mean, Sam got wrecked on the Truly Slowdown. That is true. All right, y'all. Stick around for Get Technical. This stream will automatically redirect you over there. Let us know in the chat on Get Technical if you have any tickers you want us to cover. Peace and love, y'all.